Today, July 10th has been quite something for crypto, hasn't it?
Remarkable is one word for it, yeah.
Bitcoin smashing through to a new all-time high, above $112,000.
That's the number. Definitely caught a lot of people by surprise.
Especially after things being, well, pretty quiet lately. It really makes you ask, why now?
Yeah.
What's actually driving this?
Right.
So we're going to cut through the noise today, get to the core insights behind this huge surge.
And it's important to remember, it's rarely just one single thing in these markets. What we're likely seeing is a powerful alignment, different elements coming together.
Perfect storm, maybe.
Sort of, yeah. So our mission here is to unpack those key drivers. We're talking global economics, politics, technicals, institutional moves.
The whole picture.
Exactly, to give you a really clear understanding of what's truly going on.
Okay, let's dive in then, thinking globally first. What's happening on that big macroeconomic political stage that could shake things up like this?
Well, there have been some pretty significant moves recently, like President Trump announcing new U.S. tariffs, specifically targeting countries supporting the BRICS Bloc.
BRICS, Brazil, Russia, India, China, South Africa.
Right, that's them. And there were also extra duties slapped on imports from Brazil, the Philippines, Brunei too.
Okay, so trade tensions are up. How does that connect to crypto prices?
It creates global economic uncertainty. Serious uncertainty. And when that happens, some investors start looking for, well, alternative assets.
Asset outside the usual system.
Precisely. Things like cryptocurrencies can look attractive as a hedge, maybe even more so than gold sometimes, because they're seen as further removed from, direct government control and regulated markets.
Interesting angle. Hedging against sovereign risk, not just market volatility.
Exactly.
Okay, and sticking with the macro picture, what about interest rates? That's always a big one. Any news from the Fed?
Yeah, that's definitely another piece of the puzzle. There's growing chatter, anticipation really, of a U.S. Federal Reserve rate cut.
Lower rates on the horizon.
Seems to be the expectation. We've even heard comments suggesting the current rate is 300 basis points too high.
Wow, that's significant.
It is. And the prospect of lower rates, that's usually bullish for risk assets.
Including Bitcoin.
Including Bitcoin and other cryptos, yes. Lower rates signal easier money, potentially pushing capital into assets like these as traditional yields fall.
So those high-level Fed decisions really do trickle down.
They absolutely do. It directly influences where investors decide to put their money, especially in the crypto space. So for you listening, keeping an eye on these macro shifts is key. They often telegraph bigger market moves.
Right. Let's pivot then. Institutional money. We've heard about it for years, often felt like more talk than action. Is this time different? Are the big institutions really jumping in now?
Well, the evidence is certainly getting harder to ignore. We're seeing a definite uptick in Bitcoin holdings by some major players.
Got any examples?
Sure. The H100 group, for instance, they just added nearly 47 BTC to their reserves.
Okay, that's noticeable.
And Metaplanet, they've been accumulating quite a bit, over 2,200 BTC recently.
2,200, wow.
Yeah. That kind of institutional buying, it provides serious upward pressure on prices. It's a strong signal.
And what about the ETFs, the spot Bitcoin ETFs in the US? Are they seeing real money flow in?
They are. We've seen multiple days in a row now of positive inflows.
Not just a one-off spike then?
No, it looks like sustained interest, consistent inflows. It suggests growing confidence from institutions about the market's longer-term prospects.
So for you watching this space, what does that signal?
It's a sign of maturity, really. Validation. It tells you that the big traditional financial players are increasingly viewing crypto as a legitimate asset class, not just, a pure gamble.
Okay, that makes sense. So we have the macro backdrop, the institutional buying.
Yeah.
But let's talk charts. For the technically minded folks out there, were there specific signals flashing before this surge?
Oh, absolutely. From a purely technical standpoint, Bitcoin had a major breakout.
$111,000 level.
It smashed right through $111,000, didn't pause much, and went straight on to that new record above $112,000.
And breaking a key level like that often triggers more buying, right?
Exactly. That technical breach did two things. It encouraged more traders to jump in, and it forced short sellers, people betting the price would fall, to buy back Bitcoin to cover their positions.
Short covering adds fuel to the fire.
Definitely. It amplified the rally, pulling the broader crypto market up with it.
It's funny, though, thinking back just, a week or two ago?
Yeah.
The market felt incredibly still, almost boring.
You're right. It was very quiet. Trading volumes and volatility, they were actually at yearly lows just before this happened.
So that quiet period was deceptive.
In a way, yes. It essentially set the stage. Think of it like a coiled spring. or maybe a summer lull that was just masking a lot of pent-up demand.
Okay.
Then, as soon as these positive catalysts, the tariff news, the rate cut talk, the institutional buys hit the market.
Bang! The spring uncoils.
Precisely. All that latent demand was released, leading to this explosive move. It shows how these quiet periods can often build pressure for a really sharp move when the right conditions finally line up, like the market was just holding its breath.
Fascinating. So macro, institutions, technicals, check. Are there other, maybe less obvious forces at work here? What about, say, whales or futures markets?
Good question. Yes, those play a part too. We are definitely seeing significant activity from large holders, the whales as they're often called.
Moving the market with their size.
Potentially, yes. And there's also renewed interest in the futures markets. That adds to the price action, boosts open interest. We've seen it notably in assets like Shiba Inu and, of course, Bitcoin itself.
So activity from the really big individual players and in the derivatives markets.
Correct. They add another layer of momentum.
And what about options? You sometimes hear about big options expiries impacting the market. Did that factor in recently?
It likely played a role, yes. We had some large-scale options expiries recently.
How does that help a rally?
Well, when a large batch of options contracts expire, it can clear out a lot of the short-term speculative positions and associated uncertainty.
Sort of clears the decks.
Exactly. It can remove some noise, allowing for a cleaner, more decisive move in the underlying spot market, like the one we just saw. It's one of those background market mechanics that can actually be quite powerful.
Okay, so putting it all together then. Today's massive crypto rally, Bitcoin's new all-time high.
Huh?
It wasn't just one thing.
Not at all.
It was this confluence, this mix of global uncertainty from tariffs, the market anticipating Fed rate cuts, a clear technical breakout on the charts, plus strong signs of real institutional buying and renewed activity from whales and futures traders after that super quiet period.
That sums it up well.
That's
a potent combination, all pushing in the same direction at the same time.
Really shows how interconnected everything is.
It absolutely does. And if we connect this to the bigger picture, this rally is just a fascinating snapshot of how global finance works today, how interconnected it all is. So maybe a final thought for you. As you continue to watch this unfold, what factors do you think will be most crucial in either sustaining this momentum or perhaps reshaping it in the coming weeks and months?